We're going to start today's program with a conversation with Ray Wu, Managing Partner of Alumni Ventures AI Fund. Ray, welcome to the show.
Thanks for having me.
Ray, since this is the first time we have you here, let's start with some introduction of your work, your background, as well as Alumni Ventures.
Sure, happy to do that. Thanks a lot for having me. I started as a technologist by training. So my background was actually in electrical engineering. So I started with doing compilers on mainframe when I started a long time ago. Then I was an operator for many years. I had my own company, and then I was in corporate ventures for many years. Initially with Cisco doing investment merger acquisition. I ran HP Ventures for 4 years. Then I did a bunch of cross-border investments between Asia and the US for almost a decade. When the world was flat, I was traveling 250,000 miles a year. And then COVID happened. So it becomes a little bit harder to travel. I joined Alumni Ventures about more than four years ago, start building on top of the multiple funds on top of Alumni Ventures. Right now, focusing on AI, focusing on blockchain and a few university school funds. In terms of the Alumni Ventures, it is set up about 10 years ago. So the whole goal is to democratize the VC access for individual investors. So think about anyone who can build mutual fund portfolios with large public companies. We're allowing anyone to build venture portfolios, essentially with 15 to 20 portfolio companies on a yearly basis for each fund. And then with minimum investment, about $10,000. So anyone can join and be able to have exposure to the private market. So we, as I mentioned, 10 years ago, we raised over $1.4 billion from individual investors who are one of the most active VC in the US based on PitchBook data. Probably 200, 300 deals on a yearly basis. We co-invest with well-established venture capitalist firms, such as kind of Perkins, Sequoia, A6EZ of the world. And then our value add is essentially networks. So you think about it, we have about 850,000 community members from more than 20 university alumni network. And that's, one area really helps the entrepreneurs tap into a large university alumni network that they can connect into, finding employees, advisors, board members. So that's on the human resource side. Because we're so active, we have more than 1,400 portfolio companies, which are really helpful. We have a CEO service teams, which connect CEO with other CEOs. So, which is a great way for entrepreneurs to tap into our network and to be able to build an ecosystem within our ecosystem as well. So that's the value add. That's kind of how we can co-invest with some of the well-known investors.
Does that mean that you are following rounds? You don't lead rounds?
We don't lead. We're a co-investor model. That's kind of reason we can do so many deals on a yearly basis.
Yes,
it's the whole setup is to, again, like I mentioned, is to allow any investor to have a diverse portfolio. I mean, in a normal approach, I would say I have my own funds that probably is doing 5 to 10, maybe 5 deals on a yearly basis, right? So I lead my own deal, write my deal term sheets. In this model, because we co-invest with well-established other VCs, so we don't have to write a term sheet, allow us to have wider exposure and quicker access to a lot of deals, and we're just adding our network along with our investment.
Okay, so let's talk about some of the companies, especially in your AI fund that you have invested in, just to understand the AI thesis, investment thesis, as well as the trends that you are seeing.
Sure. We focus on AI mainly from, I'd say, the areas where what empowers the type of AI native type of companies we call AI first. So we're launching our fund is called AI First Fund. So essentially, think about the company won't exist if not because large language models or just any kind of language models, the proprietary data, the agent as a foundation versus a bolt down. So that spans across from infrastructure to applications, right? So if you think about infrastructures, we've been doing a lot of infrastructure investment in the last few years, such as Neo Cloud, like Lambda Labs. CoreWeave when IPO this year has done very well. Lambda is in a similar category. We have done a company called Cohere, which is a large language model for enterprise. We have done a company called Grok, which is more of a fast, high-performing inference platform. Then others like unstructured, transform complex unstructured data into a structured data for AI. So across the infrastructure areas, we have done quite a lot of investments. Lately, we're moving more into application areas. We start to see just because of DeepSeek, because the language maturity's cost structure coming down, there's a lot of kind of more AI powered verticals coming in, new business models, right? So we have done quite a few of these investments in the patents, in the accounting, in the insurance, in the drug discoveries, in the so across the different verticals. So our theme is pretty much anything that empowers this new generation of AI-enabled services and platforms.
And if you were to highlight some themes that you're seeing in the deal flow right now, what are some of the trends that you're seeing?
Like I mentioned, the infrastructure has always been one of the core themes, only because at this time, I think a lot is around infrastructure, just like we saw in the .com days, or internet wave and mobile wave, right? So internet, the same thing. One was in Cisco, was mainly the infrastructure build out first before we see like Facebook, Google of the world come in and kind of building on top of that. Then mobile is the same thing. I mean, mobile happened, and you see a lot of Ubers, Airbnbs building on top of it. So that kind of infrastructure wave is the first wave. We call AI first infrastructure. So those kind of areas is one. Then we start to see more of what we call AI first type of verticals, industries, kind of industry transformation. Because of that, AI is empowering a lot of these kind of new areas from kind of new ways. Even sometimes you see the AI powered roll-ups, these kind of new industries kind of being taken over by some of the AI.
Have you invested in AI powered roll-ups?
We have done a few deals, and this is one area we spend a lot of time looking at it. We normally talk about high touch, high power, because it's actually high touch.
Let me just a second for the audience. Let me explain what AI powered roll-ups are. So the thesis is that there are traditional companies, and by infusing AI into all dimensions of an existing company, you can get huge leverage out of that company. And you assume that you're taking a company that has really good customer base and so forth, and then you're basically putting AI in every dimension of that company and turning that into an AI first company, but it has its own business. And this is an investment thesis that has been floating around Silicon Valley. Silicon Valley has never done this before. This is the first time we are seeing this kind of deals.
Yes.
So do you have any example that you have invested in? I would love to hear more about one such example.
Sure. Yeah, this is definitely a new theme. Only because I think it is traditionally only in the PE realm, and this is the first time. I think PE is all about kind of human cost is one of the component of cost cutting, right?
All about cost cutting, yeah.
Yeah, AI as an agent is sort of semi-human to a certain degree, and not only the augmentation but also replacement to a certain extent. So we do see that this kind of high touch high-tech models works out. We have done a company called Roofer. So essentially, it's more of the kind of roof aggregation companies. Essentially, on the their basic model is that you'll be able to do vertical roll-ups on the roofing service companies, and which is one of the most expensive costs on house improvement. But also building a brand that you can actually get people who want to come in and as a lead gen, and then they use technology as drones, kind of taking photos of the roof and be able to give you a quote very quickly. And then either they will have this kind of service team to help, or they basically would give out to the local, kind of more of the local partners that they can service. So over time, essentially build up more of a national footage around that model. So that's one area in the home improvement.
So just a second, since we are trying to understand a case study.
Yeah.
What is it's like an Angie's List kind of model?
It may not be Angie. It's I'll call it more of a.
But it's a vertical specific Angie's List kind of model, right? You have roofers that are going to be part of this service, this brand, and you're going to, the umbrella brand is going to collect the leads and then distribute it to the service provider. Isn't that what you just said?
Well, no, actually, ideally, it's its own firms that are doing it. So it has to do vertical roll-up. So it does acquire roofing firms that in the local areas, right? But you wouldn't be able to have all geographic areas with your own roof service team up front, right? So this is very much a regional roll-up play. So it depends on which sector. So they started with Texas. So they have bought some firms in Texas. They're looking at other regional areas. And then, but from a customer perspective, it could be coming from multiple regions within the country. So that's essentially when you get the leads, who are you going to serve? So I think the strategy is that you be able to leverage the local partners, but because the technology is all about be able to give quotes and be able to find the kind of the construction optimization around the materials and the services in one scoop. So this is kind of bolt on the technology in addition to a traditional service model in this case.
I see. And one of the big value additions, technology value additions, is with drones doing the assessment.
Yes.
I see. Interesting.
And also, I think only because you have over time accumulate a lot of data associated with roof conditions, replacement cost. So you actually get a lot more data to a certain degree because this kind of accumulation of databases and data points. So with AIs, you'll be able to do very quickly, essentially figure out the cost associated with that, but also the kind of complexity, time required, the service and insurance associated with that. There's a lot of new angles that can attach to that the service space.
Interesting. There is a completely opposite trend, but it's kind of similar that I'm seeing a Y Combinator put out there the types of companies they're looking for recently, a few months ago, and one of those companies, one of the types of companies, like full stack AI.
Yes.
So it's the counterpoint of this is that one, you take something that is existing and built up, and then you kind of re-engineer and do digital transformation or AI transformation on it. And here we're talking about something that is built from scratch, but to do a whole full stack company, like a new insurance company or a new whatever, different kinds of companies. Have you seen that in your portfolio?
Yeah, we have. Actually, there's another company called Corgi, which is kind of, they bought the insurance license. So the company actually is not that visible yet, but also in the Bay Area as well. So it's more of to be able to build the kind of the insurance agency that with the AI behind it. So we start to see more and more this kind of empowerment, kind of full stack that just beyond just selling the software, right? Traditionally, it's very horizontal. All our as the scalability is around how to sell the software into the traditional business and enable them to do more. But with the AI, sort of just because this become almost like a virtual employees, you can empower and scale this very quickly. So the new model becomes almost internally, there's a lot of AI service agent, doesn't matter what that agent is, right? Could be customer service, could be like the normal workflow process, enablement to more of the sales agent, or almost like SDRs, kind of doing a lot of these kind of internal type of things. Then you have a service partner, which are human, kind of go out, still doing this kind of high touch model, right? So I think we're going to see a lot of these kind of things in high cost areas, right? Doesn't matter, it's legal, accounting, tax. We're seeing quite a few of these different cases popping up, in addition to some of the example I just mentioned.
Now, what does a company like that, a full stack company, this insurance company, Corgi, what does it look like? Does it start with a very large amount of funding? What is the financial structure of a company like that you're seeing?
Well, it doesn't really need to be a lot of funding, but it does really. So I think this kind of company a little bit harder to build. So we're experimenting with different our investment theme as well. I think traditionally, if you think about who come into the space, mainly as the PE guys, right? So they have the financial engineering, they have the operational experience. In this model, I actually need to add in the component of the technology. So that takes almost the technology guys, the insurance, the technology expertise, the operational expertise, which is running the company and rolling out the company, and the financial expertise to actually construct a kind of business model that makes sense. So which is more of the extension beyond the full stack. So there's two models, right? So you mentioned the full stack AI companies, and you mentioned so this is like the almost extreme of where you can take this kind of the models into both the kind of the operation scaling in that sense. So really, as a lot of these, as a traditional, if you look at traditional PE model, traditional PE in this model doesn't actually, a lot of this is a venture debt enabled equity services. So you probably takes,
No, I'm not talking about the existing company model. I'm talking more about that's kind of like an AI takeover model. You have to do what, a McKinsey or a BCG does to completely reinvent the workflow and put AI in every step of the way. That's a different model. That, of course, that if you're buying an existing company, that does need a lot of money to buy an existing company.
Yeah.
But if you're trying to build a new insurance company from scratch, that is also an expensive proposition. That's my question.
Yeah, I think there are certain areas where, for example, if you buy insurance is state by state, so you do need a license to operate. So what Corgi has done is essentially they bought an insurance agency that actually have this kind of license capabilities and to be able to operate across multiple states, right? So that's always there's always the infrastructure acquisition side, which is sort of what you just mentioned. It's kind of capital intensive and costly.
Oh, I see. So this is not being started from scratch. It is being done with an acquisition and then building on top of that.
Yes, always. This AI roll-up type of model is always based on the buy-in and extension.
Yeah, but I was not asking you about AI roll-ups. I understand the AI roll-up model.
Yeah.
I was asking you from about this Y Combinator model of starting from scratch something that is a full stack company.
I think the full stack companies really depends on you. The question is how do they approach the overall go-to-market, right? So if the go-to-market, we start to see a lot of these kind of companies, if it's still in the service areas, then I don't think it requires a lot of capitals up front, because what they are leveraging is kind of more the computing capabilities, right? So rather than hiring a lot of people, if you think about traditional cost structures, it's mainly the infrastructure cost of the computing and then the infrastructure cost of the human, right? Those are the two big fixed costs. Mm-hmm. Computing areas already being kind of shrinking down, because old days when I was like 20 years ago, when we started VC, a lot of times you fundraising, You buy networking, you buy storage, you buy computing. So that's already been coming down because
yeah, but AI has also pushed up computing costs.
Well, true. AI does, but at least it's a variable cost to a certain degree, right?
It is a variable cost.
Right?
It's a variable cost, yeah.
Right. I'm talking about fixed cost. So how do you remove the upfront fixed cost? Even human is kind of originally is very much a fixed cost, but also if you think about AI agent,
yes,
you can test out your model 0 to 1. Once it works, then you can get 1 to 100. That's again, there's a variable cost. In my mind, it's the scaling based on the customer needs. You don't need to get a lot of capital upfront. So we start to see a lot more innovations or a lot more possibility of people just starting with a few people and coming in, build a whole company, and doesn't require a lot of funding to test out different models. And when that's proven, then you can use the get additional fundings for that scalability, right? So I think that is where you still need the funding because in this attention economy, it doesn't matter you're looking at the B2C or B2B. There's only so much people I remember or even be able to get into a channel, right? People be able to listen to your post. So I think that still takes a lot of funding, but initially experiment, I think as a startup or YC type of models, I don't think actually the cost structure, I think over the years has become better because.
Yeah. Well, and I think the whole thesis of the reason Y Combinator is pushing that is because of this agent model that is developing. People are automating a lot of stuff, and if you have a clean slate, it's easier to automate a lot of functions and just get things going. And there is a lot of that going on right now in the startup ecosystem.
Yeah,
so
100%.
You can get very far with that agent model. I think what you pointed out is also true, is that go-to-market still is expensive. You can get something going, you can get a few customers and get it going, but the minute you get in the realm of programmatic customer acquisition, whether it's social media advertising or, search advertising or whatever, digital advertising, digital customer acquisition models, that's where it's still expensive.
Yeah, there's I just think that as the VC industry will adopt over time, right? So I think more of we'll see a lot more startup on the beginning phase. Then I still think a lot is kind of new. I mean, how do you actually scale the company? How do you find the right people? How do you go to market? That's still they need a lot of networks. So that's kind of the reason we, as an Alumni Venture, we still exist and be able to help them is by helping them with finding the right people to build their teams and to be able to find the right customers through this kind of networks to be
network
able to,
helps. Network helps.
Networks helps great time, right?
Helps.
That's what you're doing also, building out this great network, right? So in the end, we're humans, it is the network, but certain things, right, that we do day in and day out, mundane type of things can be automated through this kind of agent. So I do see the scalability of this model. And then I think there's a lot more to that we're discovering with the new possibilities of this agent infrastructures. And so we're very excited about this space.
Very good. All right. Well, Ray, do you have time to stay for some pitches?
No, unfortunately, I do need to run to the office.
Okay.
So,
all right. Thank you for coming.
Thank you. Appreciate you having me.
Bye-bye.
Bye.